As an investor, I've always kept a watch list to track companies I might want to own a piece of. It's my investable universe, and today I'm going to go through 5 companies from that list that I believe are worth buying and holding, potentially forever. It's easy to get overwhelmed by the day-to-day noise of the market, the breaking news, the charts flashing red and green. That environment can make you feel like you need to constantly be doing something, which is often when mistakes are made. But what if you could build a portfolio of businesses so strong that you could confidently buy them and not worry about what the market does tomorrow? That's what we're going to look at today. We're not talking about timing the market, but about ownership. These are 5 powerhouse companies that I think could be the bedrock of a long-term strategy, the kind of businesses that let you sleep at night because you're focused on the value of the company and not the daily stock price. Right, so the first forever stock is a company that has managed to stay dominant for decades by making one of the most impressive business pivots I've seen: Microsoft. For a long time, Microsoft's success was tied to the PC, but under its current leadership, it's become a titan in cloud computing. The main driver of this is Azure. Even with the economy slowing down, Azure's growth has been incredible, recently posting a 28% growth rate. It's become the essential infrastructure for thousands of businesses. This leads to what I see as Microsoft's deep economic moat, its ecosystem. Once a company is running on Microsoft's cloud using Microsoft 365 and other tools, it's incredibly difficult and expensive to switch. This creates a predictable, recurring cash flow from subscriptions, which is exactly what you want to see as an investor. It's this model that has allowed Microsoft to achieve incredibly consistent revenue growth, powering through recessions and market panics. While there have been small dips here and there, the long-term trend is one of remarkable consistency. With a massive market cap of around $3.8 trillion, and some analysts seeing potential upside, Microsoft isn't just a software company. It's a core part of the digital economy. The biggest risk is the intense competition in the cloud space, but Microsoft's integrated approach gives it a powerful advantage, making it an essential holding in a long-term portfolio. Next up is a company whose name is basically synonymous with growth: Amazon. Since 2008, Amazon has grown its revenue every single year, a track record that's hard to match. A lot of people might still think of Amazon as an online bookstore, but that's just the tip of the iceberg. Amazon's business is really built on 4 massive pillars. First is its e-commerce platform, which is a giant, generating over $450 billion in annual revenue and has completely changed how we shop. Second is Amazon Web Services, or AWS. It faces tough competition but remains a leader in cloud computing and a huge profit engine for the company. The third pillar is the one many investors might overlook, but it's arguably the most exciting: advertising. This part of the business recently surged 24% year over year, making it a nearly $70 billion annualized business. That's growing faster than AWS and likely has even better profit margins. Amazon's ads are so effective because they can catch customers right at the point of sale. Finally, you have subscriptions. Things like Prime and Audible create a very sticky customer base and generate about $50 billion in high margin annualized revenue. What's genius about Amazon is how it constantly reinvests its profits into new business lines, creating a machine that funds its own growth. With analysts seeing a 17% upside, Amazon isn't just one thing. It's a diversified company set to benefit from major global trends for years. Our third forever stock is a company so integrated into our lives, its name is a verb: Google, or more accurately, its parent company, Alphabet. The foundation of Alphabet is its complete dominance in search advertising. This is one of the best business models ever created. It generates huge recurring revenue by connecting advertisers with customers at the exact moment of intent. This creates an incredibly wide competitive moat. But Alphabet is much more than search. It owns YouTube, the world's biggest video platform, and has a growing cloud division. It also has a massive amount of data and talent in artificial intelligence, which is set to reshape the entire economy. What makes Alphabet particularly interesting right now, though, is its valuation. If you look at the tech titans on this list, it currently trades at the lowest PE ratio of them all. This suggests that while its peers have seen their stock prices soar, Alphabet, although their price has increased a lot year to date, still has room to run. And the market is underappreciating the long-term power of all of its assets combined. The biggest risk here is also its biggest opportunity, AI. The race is fierce, however, with a market cap of around 3.4 trillion and its deep roots in our digital world, Alphabet has the resources to stay a dominant force for a long, long time. We're about to get into our final two stocks, which are in completely different industries. But first, if you're finding this breakdown valuable for how you think about long-term investing, take a moment to hit that like button. It helps the channel reach more investors like you. Our fourth company isn't a tech giant. It's a financial powerhouse that acts like a global toll booth for commerce, Visa. Visa, along with MasterCard, operates in what is essentially a duopoly in payment processing. What's remarkable is that they don't engage in any kind of price wars that hurt profits in other industries. Instead, they both benefit as the world continues to move from cash to digital payments. Visa's business model is brilliant in its simplicity. The company takes a small cut of every transaction on its network. This makes it naturally resistant to inflation. As the price of everything goes up, the value of transactions increases, and Visa's revenue automatically rises with it. You don't see that in many other businesses. This creates a structural growth engine that is almost unstoppable. As global commerce and e-commerce expand, Visa's potential to earn continues to grow, just by sitting at the center of the economy. The main risk is disruption from new payment technologies, but the sheer scale of Visa's network and its security create massive barriers for any competitor. For the foreseeable future, Visa remains one of the highest quality, most durable businesses you can own. Our final forever stock is a retailer that has thrived in the age of e-commerce by using a simple but powerful model, Costco. Costco's magic isn't just in the products it sells, but how it sells them. The entire business is built on a membership model. Customers pay an annual fee to get access to its warehouses. This creates an incredibly loyal customer base with a retention rate of over 90%. That membership fee is a source of high margin, predictable revenue that doesn't depend on quarterly sales figures. Operationally, they are excellent. They offer a limited selection of high quality items at a very low price, a value proposition that works especially well when the economy is uncertain. What some investors might not realize is Costco's growth potential. A company like Walmart has over 10,000 stores, but Costco has less than 1,000. This gives it a clear path for expansion for decades to come. Now we have to talk about the valuation. With a PE ratio of around 50, Costco often looks expensive. Some analysts even think it's overvalued. This premium price reflects the market's belief in the quality and durability of the business. For a forever investor, buying a superior business like Costco is possibly worth paying that premium. It has a proven model that works in any economic climate, making it a fantastic addition to a long-term portfolio. So there we have it. Microsoft, Amazon, Alphabet, Visa, and Costco. 5 different businesses, but as you can see, there are common themes. They have recurring revenue from subscriptions and memberships. They have deep moats that make it hard for customers to leave. They have multiple ways to grow, so they aren't reliant on just one thing. And most importantly, they have a history of navigating economic storms. Investing this way is about a shift in mindset. You're not just buying a stock ticker symbol. You're buying a piece of a world-class business. You're becoming an owner. And when you think like an owner, the daily market noise starts to fade. And you're left with the confidence that comes from partnering with some of the best companies on the planet. What are your forever stocks? Let me know in the comments below. And if you want to continue building a resilient long-term investment strategy, make sure you subscribe. Thanks for watching.